Welcome to the High Value Customer Podcast, the show for business leaders to learn how to attract and retain high value customers. This week's guest is Arindam Basu, who is founder and CEO of Digilytics. Based in London, UK, Digilytics helps lenders achieve simpler, faster, cheaper lending by improving the loan origination process using Digilytics Revel, their AI products. How are you doing today? You well?
Very well, Chris. How are you?
I'm doing exceptionally well today. Thank you very much for asking. So can you tell us a quick story about how you've got to where you've got to in your career?
Yes, thanks a lot, Chris. And, as you can guess by the color of my hair, I've spent a few years, I spent over 25 years in corporate life, initially with a company called Anderson Consulting, which is today called Accenture, and then with Infosys, driving change through disruptive technology. And about 4 or 5 years ago, when artificial intelligence was really getting introduced and sweeping through all of our lives, I thought it was an opportune moment to launch a company which could leverage AI to improve one set of industry players. And we focused on lenders, specifically secured lenders, and our product improves their origination process using AI, and they're able to offer loans simpler, faster, and cheaper.
So you obviously help mortgage lenders to with the loan application process. Tell me about your ideal customer. Would it be anyone who provides mortgages, or would it just be a specific type of mortgage lender? Like, who's your ideal customer?
Yes. So it is mortgages, and it is what we call secured commercial lending. So anybody who is offering secured lending products. But very interestingly, we tend to focus on not on the tier 2 and the tier 3, so the smaller and more nimbler lenders in the market, who would be comfortable introducing disruptive technology, so are not bogged down by legacy systems and are sort of easier with adoption of change. So tier 2, tier 3 mortgage and secured lending players in the market.
So I guess the more sort of challenger brands. So the comparison in the banking world would be, the kind of Starling Bank and the Revolut and N26, although I don't think they're around anymore, but Monzo's and the like. I guess there's some equivalent challenger brands in the mortgage world, is there?
Yes, I mean, the challenger brands are certainly building their own origination products and offering this more quickly. Our focus is the traditional tier 2, tier 3 banks, so like Together Money or any of the building societies, or banks like the Co-op Bank. These are players who are not tier 1, but would be extremely eager to use new technology to become competitive and compete more efficiently with the challenger banks. I think that's our ideal segment. So
have you been totally clear on your ideal customer since you started the business, or has it kind of evolved over the years a little bit?
Oh yes, I mean, it's been a process of evolution. When we first launched the business, I think we were very broad and very generic, and we did some very good work in large corporates and large banks, including the tier 1 banks. But pretty soon we found that for a startup business like us to be efficient and grow quickly, we needed to be narrow and deep. So we very, very quickly focused in on a segment of the industry where we found the product fit. So our product had a good fit with this segment, and we stayed with that.
So obviously AI is a kind of big trend across, the whole of industry, but talk to me a little bit about the future as to what your ideal customers' worlds are going to look like. What are the big trends for them, and how do they affect your ideal customers?
Yeah, one of the biggest trends and the biggest problem that we're trying to solve is that when it comes to getting a credit card or what we call unsecured loans, it's the process is very easy and simple. When it comes to securing a mortgage loan or any other secured loan, the process is extremely lengthy, it's complicated, it requires a lot of documents, and it's very difficult for both for the borrower and for the lender. We are in the market to make that process much simpler. We believe that with the rise of digital technologies and what we call the rise of intelligent digital, which is combining digital with AI, we can solve this problem very effectively and very quickly. In the future, we would expect that mortgage lending or mortgage borrowing or borrowing against any other security, be it office equipment, be it industrial equipment, farm equipment, would become as simple as borrowing or applying for a credit card loan. That's the vision that we are out to achieve. That's the vision that will significantly simplify the lives of both individuals as retail customers and small businesses who are customers of our clients. So we want to solve the problem of our clients' customers.
So I've got a reasonable amount of experience applying for mortgages. I've got a few buy-to-let properties I manage, so I'm aware of the sort of headaches and the kind of hoops that they make you jump through. So talk to me a bit about what would it look like if I was to apply for a mortgage in, I don't know, what sort of time span are we talking here? 5 years, 10 years?
No, we're talking about the next 2 to 3 years. So there's a lot of activity around, with the rise of digital and with the rise of providers of data, independent data. There's a lot of what we call third-party data that lenders can use, which reduces the amount of information that lenders need to request from a borrower. However, it's not everything that can be got from reliably from a third-party source. And the regulator and the courts of law require something that is what we call customer stated. So what we are trying to do is we are allowing lenders with our technology to request minimum amounts of information and supporting documents from borrowers, and with a one-touch process, have a straight-through processing of that loan. So on an average, if you take the mortgage sector, lending is typically around 32 days. That is the UK average. Now, it is very dependent on the lead times required for valuation. But as valuation becomes more automated and more what we call desktop-based, you can bring that down to anywhere between 1 and 2 days. Now, we have been speaking to players who have a vision of the 1-hour mortgage. It's possible in certain cases where it's simple and there's not a lot of different complications in the loan process. But we tend to focus our technology on the more complex or the more specialist loans, and where we believe that the lead times can be brought down from 32 days to 1 to 2 days.
So I guess when you say the more complicated loans, I guess that's the perhaps not the mass market, the more specialist assessments of circumstances, rather than maybe the 80% of people that might be able to get a loan in 1 hour in however many, whatever time frame. There might be 20% of people that have slightly more complicated situations. So maybe they're self-employed and they've got more complicated books and they can't just submit pay slips, and they've got to submit more complicated documents. So I guess is that the end that you're kind of trying to, maybe not necessarily self-employed people, but I just, like you said, the more complicated end of the assessment process.
Yes, I mean, unfortunately, the complicated end is bigger than 20%, so it's almost half of the market. But yes, it is for people who don't have regular income or are multiple applicants. The properties that they're trying to buy or the assets that they're trying to raise finance against are not very easily valuable. It takes a lot of documentation, or the financial flows of the companies that they represent are not very, very straightforward. That actually represents more than half the market, and it is that half that we're focused on, not so much the high street banks who tend to focus on the salaried employee, very steady income, very standard assets like apartments or houses that they're trying to raise loans against.
I've noticed from my own experience of becoming what they consider a portfolio landlord, once you've got 6 buy-to-let properties, there's a whole bunch of questions and stuff you get answered, and you get kind of ask questions about your entire portfolio and not just the one investment. And it kind of seems a little bit counterintuitive, because if you've got 6 properties, you probably know more about whether you should or shouldn't buy it and whether it's a good return or not than if somebody who's got 1 or 2. Then by the time you get to 6, you've probably figured out a bunch of the problems that you might have, and hopefully wouldn't be getting it on the 6th property. But it seems a bit counterintuitive that the more you've got, the more due diligence they do, rather than the other way around.
Absolutely, and here is where lies the travesty. The more complicated the business. So if you have 6 properties, you're understanding your financial position and the risks associated with it is a lot more complex. But if you look at what most lenders do, they spend about 80% of their time organizing the information and doing basic checks, and 20% of the time actually looking at the real credit risk. We are being able to apply intelligent digital and our product on the 80%, so that it comes down significantly. So organize documents very in a simple manner, extract information from documents and validate them. So we have, what we call the 3C check, the completeness, correctness, and consistency check, all using AI, so that there is very little human input in that. And where it's really important that the lender needs to, gauge the overall picture, or needs to speak to a borrower or a broker to be able to explain the scenario, that is the only place where the human involvement is. So that's been our approach in building our product.
So talk to me a little bit about how you provide value to your ideal customer. Like, if you was to sum up, why people do business with you, or maybe like if someone who is doing business with you suddenly stops, like what would be the kind of key points of value that one of your ideal customers would get from doing business with you?
Yeah, so people use us because we make their cost of origination lower. So it makes it simpler and faster and cheaper to lend. If somebody were to stop using us, they would end up having a loan origination process or a lending process which is longer, more complicated, and more expensive. And if it's more expensive for the lender, it ends up being more expensive for the customer, because they will try and pass on as much of the cost as possible to the customer, be it in terms of pricing or arrangement fees or anything. So customers, and especially given the current scenario because of the COVID crisis, there is a tremendous pressure on offering cheaper lending. People need capital. People need cash. They need cash quickly, and they need cash cheaply. Now, while the government has done extremely well in passing on some of the funding to lenders, to the banks and other lenders, being able to pass that on seamlessly in a similar, simpler, faster, cheaper way to borrowers, to actual borrowers, be it small businesses, be it individuals, is where we play a role.
So talk to me a little bit about how you align your team to deliver the best value, because I understand you've got a couple of offices, so people are fairly kind of spread out around the world, and I guess now everyone's working from home, even more of a challenge to kind of make sure everyone's on the same page. How do you make sure everyone's kind of doing the best things for all of the customers? How do you get people aligned?
Yes, it has been challenging, but we're trying to have our own medicine. We, using our product, it is extremely easy for lenders to work from home or to work from different offices, and we are doing exactly the same. So, because of our ability to use our technology and to develop the technology from remote locations, people are working from different offices. We are really adopting the work from anywhere mantra, where you can either work from home, you can work from an office close to you if your home is not conducive to work, or you could come into our office and work. So while distributed working has become challenging, I think we as a company because of the technology that we have developed and using it for ourselves, are not as significantly impacted as some of the others in the industry.
I know just from our experience, like everyone else, we've been forced to work at home, and our team's relatively small, only kind of 6 people, but we've actually all quite enjoyed working from home. And, as a result, we've decided that we're going to not go back to our office when we're allowed to. We're going to basically not go back. So we're quite happy to keep working in this way, and have a little bit more kind of work-life balance and what have you that you get from working from home. So yeah, we've been quite pleased with the with this kind of situation that's been forced upon us. Absolutely. So the next question I had for you was just to give people a sort of rough idea as to how much it costs to do business with you and how it would kind of work. If I was your customer and I gave you $100,000, like what would you get for that? Is that like 36 months of your service, or like how do you kind of quantify the investment that's made into your product or service?
Yeah, that's a very good question, Chris, and having provided technology products and services for 25 years and now almost 30 years, I think it gets really important to be able to demonstrate that the fees that you're charging for your product and your service is value for money for customers. We absolutely guarantee that whatever a customer or a client pays us, we return 10 times or 10x the amount. So if you were to give us 100,000 in fees, we would give you at least $1 million back in value. And this is within the first year of providing us the fee, and the value keeps increasing year on year. So we have this mantra. How you define value, either in terms of increased contribution or increased income or lower cost, or increased gross profit or net profit, we would compute with our clients, what the definition of value is, and then offer them 10x.
Sorry, but the wind's just blown open and I can hear my children in the background. So I'm going to go and shut the door. So let's be quiet. And then I'm going to ask you that again. Is that okay?
Okay. Yeah,
I don't know if you could hear that in the background. I'm sorry. I'm going to have to just... 1 second.
Okay.
Can you keep the noise down, please? I'm trying to record something. Or be really quiet, please. Lucky we're not live on television. Yeah. And we have the fortunate position as to be able to, you can get away with doing that. I do apologize. I wasn't sure how much it was coming across, so I was kind of like...
I couldn't hear any of it, but I may have been speaking, and so I couldn't hear it.
Okay. So what I'll do is if I just go back to that question and give you the opportunity to run through that one again. Sorry about that.
That's all right.
I've got a couple of young children, which is very difficult to keep quiet when they're 2 and 4 years old. Okay, so yes. So next question I'd like to ask you is, if one of your ideal customers gave you $100,000 to invest in your services, give us some idea as to what they would actually get for that $100,000 investment. Like, is that kind of enough to cover 1 month of your service? Is it going to cover them for 3 years? Like, give me some kind of idea as to what you would get for that kind of level of investment.
Absolutely, Chris, and that's a great question, because having provided technology products and services for almost 30 years now, I think the question around, what value will I get for providing fees is an extremely important one. The way we look at it, and we actually commit this to our clients, is that for every $100,000 that you would pay us, we would give you at least 10 times the amount of value back within the same year. So if you were to pay us 100,000, the value delivered from our product and our services would be at least $1 million, if not more. And because our product is very, very easily integratable, because they can bolt it onto their existing systems, there's not a lot of implementation cost. So the value generated from using our product comes almost within 2 to 3 months of starting off the work with us.
I've been doing some work looking into for another client, sort of the ROI of business process automation, and I guess when you start to add up like half an hour here of someone's time, that's £50 an hour, and whatever, and you times that by how many applications and how many times they have to do it, it must be reasonably simple to kind of say, if you put this bit of AI in the middle and it saves half an hour per application, and you do 100,000 applications, it sort of seems fairly simple to kind of quantify the value in that respect.
Yes, I mean, when we were building the product, and we were fortunate enough to be able to speak to a few clients and do time and motion studies as to what how much time that people were spending in the process. We actually computed the impact of our product, and we found that we could achieve up to 30% improvement in productivity and 40% reduction in sort of time to offer or the throughput. So we could make the process about 40% faster and about anywhere up to 30% cheaper, which is a tremendous value add for most the lenders.
Wow, that's brilliant. So how long have you been in business for now, Arindam?
So we've been developing this product and offering it to our clients for about two years. Prior to that, we were offering primarily consultancy services. So the software business is actually is about two years old.
So in the length of time that you've been running the business, what would the and you mentioned earlier grey hair. I don't want to give it.
Forget on my grey hair.
Just I'm detecting there's a level of experience for each one of those grey hairs. I'm getting a few now. I think it's a good thing.
Yeah, yeah.
So based upon the number of grey hairs you've got, you've learned a few lessons in life about running a business. If you was to have a conversation with your pre-grey hair self, what would be the advice that you would be giving yourself?
Well, I would say first and foremost, don't be afraid. Don't be afraid to try out things and take risks. All my career I've been working in sort of what I call intrapreneurial roles, so setting up new businesses within large corporates, and a lot of the risk taking was actually done by the corporate, whereas we were doing a lot of the actual sort of setting up the business and the processes and the work. But the ability to take risk at an early stage or earlier than when I started to take my own risk, I think is definitely worth it. If you start earlier, you take your knocks earlier and you learn earlier. And if you're able to build that risk profile and survive the knocks, then you're much more successful. So timing the startup, but more importantly, time in the startup is very, very critical. I think that's the biggest lesson that I would take away. I think the second thing is, don't be afraid of meandering. So it's taken us 2 to 3 years to meander and then arrive at our sweet spot. Now, some businesses are very fortunate to be able to land on that sweet spot, or what's called the product market fit, in a much shorter space of time. But even if it's like every child, every child takes his or her own time to start walking and start speaking, right? Just because somebody has taken 2 additional months to start walking, or 2 fewer months to start speaking, doesn't mean that they're going to be any more successful or any less successful. So to be able to meander and arrive at a product market fit that you as a business founder are comfortable with, is worth its weight in gold. So don't be afraid to meander till you found your right product market fit.
Tell me about the journey from a service-based business to a product-based business. It's quite a difficult kind of switch to make. How have you found it?
Yeah, it is a difficult one. It is a complex one. And as I was saying, that we decided to become a product business about 2 years ago. Prior to that, we had been operating as a services business. And the fundamental ethos in a service business is, give me your business problem and I'll try and find you a way to solve it. Whereas in a products business, it is, I know you could have this business problem. I have a product that could immediately fix it, right? So you end up being in a services business, you end up having fewer customers, but you have a much broader footprint of services you do with those few customers. Whereas in a products business, you have, a much higher number of customers, but you're doing many fewer things in those customers. And making that shift, I think the biggest shift has been in terms of mindset, which then translates into investment focus, into activity focus. How do we develop the product? How do we take it to market? So it's been a really interesting journey.
And how long did that transition take? I mean, was you in the shower one morning saying, "I want to scale my business and I need to start creating products"? And how long did it take you? I mean, are you fully from one to the other now, or are you still a kind of bit of a hybrid of both?
No, we're absolutely still a hybrid, and I think we're going to continue to be a hybrid. The model that most successful technology companies, product companies have is a healthy mix of product and services. So I think we will always have a component of both. We are transitioning from a services-heavy business model to a product-heavy one. I'd say we're about 3/4 of the journey there, maybe another sort of year or so, and then we will hit our optimal mix of products and services.
So possibly you might have just answered this question, but I was going to ask you something a little bit about your plans for the future of the business. So you obviously mentioned to become more product focused and slightly less in terms of the mix, but don't disclose anything you don't want in the public domain. This is a podcast going to millions and millions of people, I'm sure. But what would you say is in your mind for the future of the business?
Absolutely. So we believe we have a tremendous product that is implemented in a few clients in the UK. We believe the product can be implemented across the world. And our biggest challenge now is to be able to get our message out there and to put our product in front of customers. So we have very well-defined expansion plans to go from the UK market to markets in the US, in Australia, and in India. We've started taking baby steps, but anybody who is interested in looking at our product and wants to offer simpler, faster, and cheaper loans to their customers, we would love to have a chat. I think the second thing is being able to become global requires additional capital. So while we raised an initial round of capital to develop the product and win our first few clients, to be able to get out to the 10 or 1,000 lenders around the world, around all of the key markets, is going to require capital. So if there are people who like the sound of our business and are interested in investing, we'll be happy to have a chat. We're very well defined in terms of our expansion plans. We have North America as our next stop, which is both US and Canada. We have India as a second stage, and we have Australia as a third stage. But this product is applicable globally. We've proven that it is applicable in more than one market, and we aspire to be a global company.
So as you look to expand your business, there's typically some sort of teething problems in terms of the kind of things that might get in the way when you scale a business. Obviously, you've moved from a service business to a product business, so it should be slightly easier to scale. But what would be some of the challenges that you foresee you need to overcome in the coming years trying to scale your business?
Yeah, and I'll come around to what my beliefs in the business are. But the biggest challenge is around maintaining and growing the core team. So we have a very, very solid core in the business, but as the business scales, that core needs to expand, right? And we need to expand at a faster pace. The core team needs to expand faster, excuse me, than it's taken to form the core. And that brings along with itself, challenges around communication, challenges around aligning mindsets. And I think our biggest challenge is being able to communicate and keep that team, aligned and focused on the targets of the business at an ever increasing pace.
I know even in a company with 6 people and, we was in the same office, there would still be something happening at this end of the office that someone at that end of the office didn't know about. And you'd be like,
absolutely,
perhaps we should have some kind of formal way of telling people because that person didn't know what this person was doing. So I can only like imagine what the challenges you must have when you have 100 or 1,000 or 10,000 people in your company. You must be, definitely someone the head of internal communications is going to be required as you grow beyond,
absolutely.
the that you can shout.
Yeah, and I'm fortunate to have had the experience. So when in my previous role, I started up in a group that was 5 people strong, and when I left, my team was 30,000 strong.
Wow.
So I did that over a period of 15 years, but I have the experience of being able to do it, and I'm bringing some of those learnings to our team.
Cool. So I've got another $100,000 fictitious $100,000 question for you. So
sure.
Flipping it the other way around, instead of asking what would your customers get for $100,000, I'm going to pose to you another fictitious situation where I'm just going to hand you $100,000. No strings attached. You've won the lottery. Here's $100,000. What would you do with it in your business? Tell me if you was to get $100,000 that you hadn't already budgeted for. So you've already figured out your budgets and someone said, here's another $100,000, do something to improve your business. What would you spend that money on?
Yeah, and that's a great question. And businesses like us are always capital strapped and cash strapped, so we could certainly do with 100,000 extra. So if you were to be so kind as to give me 100,000 more, I would put it into spreading the word. I would put it into sales and marketing because I keep going back to, I think we have a tremendous product and we need to do more to get our word out there. Get in front of customers, get in front of of people who can talk well about our product and can experience it. So putting that money into sales and marketing, and a lot of that, some of that is digital and marketing oriented, but a lot of that is people. People buy from people in our business, and to be able to put that money into people who can sort of expand our sales and marketing, bring in partners. We are completely aware we can't do this on our own. So we need partners, we need alliances. So to be able to bring those people to us and take us to other partners is absolutely key.
So we're getting close towards the end of the interview, and I've got a couple of quick fire questions for you.
Sure.
So got 5 questions for you. First one is, what is your favorite business book?
Well, I read quite a bit, not as much as I'd like to, but the one that I read a few years ago now actually is Built to Last by Jim Collins. Extremely good and extremely insightful experiences of how world-class companies have grown. Big fan of that concept of what they say of preserving the core and then experimenting with new ideas. So being able to achieve that balance, I think, is tremendous. I think the other concept in the book around, what I said about meandering, about trying out new things, the way, Walmart grew. In recent terminology, people call them cockroach tech or cockroach companies who are able to, withstand and pivot quickly. I think the ability to do that in a business is extremely important. I love that book.
I think I've seen a copy of that in our library at work. So when we're back in the office, I've got to maybe pick that one up. Next question. Your favorite quote? Well,
my favorite quote is actually an interesting one because I am Indian by birth, and I spent my first few years in India, and I continue to be a big Bollywood fan. So I'm going to take a quote from a Bollywood film, and it's unfortunately not in English, but
You have to provide a translation for us then.
I know, yeah. I explained it to each of my 30,000 people in my previous company, a large number of them who are not Indians, and it's from this really big blockbuster hit film called Sholay, and it's about this baddie saying it to his truth, but it goes Jo dar gaya samjho mar gaya, right? And simply translated, it says, if you're afraid, you're dead. Or alternatively, no pain, no gain. So don't be afraid. Don't be afraid. Good my simple quotes.
I like it. Next question, your favorite TED Talk?
I haven't heard too many of them, but of the ones I've heard, I quite liked one. There was a gentleman by the name of Simon Sinek, who did something around, I think it's called How Leaders Inspire Action.
Yep.
It's talking about the why of the business. I quite liked it. I mean, it resonated quite a bit in my head.
It's a very popular one. When I first heard it, I watched it 3 times in a row. Then I was telling so many people about it that I made a page on my own website just so that I could tell someone what the URL was to go and watch it.
Yeah.
So yeah, I love that one. It's a good one. So who's inspired you most in your business?
You know, I've had the opportunity to interact with a very large number of senior business leaders across my lifetime. But the first person who I met, so this was day 5 in my professional career. I was a young Turk coming out of an MBA school. In the stairway, I met a gentleman by the name of Dhirubhai Ambani. And I don't know if you know him, but he's the founder of one of the world's largest corporations called Reliance. So they're absolutely massive. They're the largest corporation in India. They've recently launched a service called Reliance Jio, which has attracted about $2 billion of investment from Facebook, and another 5 or 6 billion from other corporates. So the founder of that business is a classic rags to riches story. And I had the opportunity of holding his hand and walking down the steps for about 3 minutes. And he asked me my name, and he gave me some words of wisdom which have stayed with me all my life.
Oh, those words.
He would say, think big. So he said it in sort of Indian English, but the idea was, have a big vision. He knew that I'd come from an engineering and an MBA and from top schools, and he'd come from a very humble background with very little education. And he said, you've got great academic background, but don't compromise on your vision of what you can achieve.
So, last of the quickfire questions: dead or alive, who would you love to have as your mentor?
So it would either be a musician who's done very well in business, or if I could take, the name that comes to mind is probably Thomas Edison, who was a scientist. He built something very good, but then his greater fame was because he was able to corral, business leaders and investors and other people into a team that, built a much bigger science-based business. I see Digilytics as something similar. We've built something which is very good, and if I had his words of wisdom and his guidance as to how to corral investors and other high-powered people into a team and galvanize them into building a big company, I would love that advice.
Brilliant. So, and the last one's a really open question. If there was anything that you'd like to share, is there anything that you'd like to share with our audience that you have that I haven't already asked you?
Yeah, and it's around, our vision is around enabling intelligence to foster growth. We're like the economists in some way that we fight against darkness. Right now, we're fighting against the darkness of poor loan origination. But if you think that you can use intelligent digital to improve the lives of businesses and people by getting them access to finance simpler, faster, and cheaper. Please speak to us.
And if somebody has been listening to this, so they're interested in getting in touch with you, what would be the best way for them to reach out to you?
Three ways. We are very easy to get in touch with. Come to our website, which is digitalytics.ai. Reach out to me on LinkedIn, or if you want to send an email, I'm at ask@digitalytics.ai. So ask@digitalytics.ai. Any of those three ways that work.
Do you want to just spell the domain name just in case anyone gets it wrong?
It's Digilytics, as in DIGILYTICS.ai.
Lovely. Thanks very much for your time today, and look forward to catching up with you again soon.
Excellent. Great speaking to you, Chris, and thanks for having me.